You were worried I wasn't going to get here, weren't you?
We are now live streaming. Hi, everyone. I'm Wayne Hunter with AvTek Solutions. I am so happy you was able to join me. I was just joking around with my guest, Andy Anderson with DataStream, and I was wondering if he was going to show up, and he's here. So, good job, Andy.
Yeah, just like slid right into line, right?
Nothing like being on time, right?
Exactly.
So, some of you know me that's out there in the crowd, and some of you may know Andy as well. But for those that don't, Andy is the CEO and founder of DataStream, which is they deal with insurance out in the world, and from a broker standpoint, and handle many policies and stuff like that. I can let him share a little bit more. Myself, VAR and managed service provider, that we handle mainly Texas, Oklahoma, Louisiana, Arkansas, but we have customers all over the United States as well. What we're going to talk about today in a three-part series is today we're going to talk about what's the state of cyber insurance, because it is changing so much that it's hard to stay up with it. I mean, even Andy shares with me, it's like if you're not reading every minute of every day, it's hard to keep up with all of it. So what I wanted to do, and I asked Andy if you join in with me, is we want to do a education for you, and this is purely education about what's happening out there in the cyber insurance industry, because things are changing so fast. And what we're going to do is cover and educate on the industry, and then next week we'll actually cover how do you determine what requirements you have based on cybersecurity and policy, whether from state regulations, federal regulations, specific industry regulations, whatever it may be. And following on there is about how we're going to be able to help you address those things. So with that, I'm going to start the presentation, and we will follow through this. If you got any questions, just hit in the chat. We got a team sitting there, pop up the questions, and we can address those as we go along. We will have some questions time and answer time towards the end. So depending on our time, we'll address them as we go along. So let's move forward on this.
Cool.
So in this, the first thing we're going to do is what is the difference? What's the difference in general in commercial liability riders versus errors and omissions? So with that, Andy, and bringing those in relation to what cyber liability is, because back in the day, everybody's like, hey, there's this rider. We just click a box, answer a question. Hey, we got cyber insurance, right? As a rider. Well, that doesn't play today. Can you walk us through from the industry's perspective, the differences here and what we should be aware of?
Yeah. So you used to see more of this, which was, yes, it was a rider, what was known as a package policy. And you still see some people have that, but when we take a look at it, it's usually the coverage is much narrower, and often the limits are in many cases just grossly insufficient, right? We'll see, multi-million-dollar companies with $50,000 worth of cyber coverage, right? Which, if anyone who's lived through a real cyber incident knows that'll about cover the cost of the coffee for the incident response team when they show up, right? But these are events that tend to go into, often into the millions of dollars. So you want to make sure that you have an appropriate amount of coverage, right? So, and then you saw a big move out of the insurance industry over the last couple of years to very clearly either exclude or include cyber policies into the wording of documents, because what you had, not to get too technical, but basically like an insurance policy has to, it covers all risks unless often it's specifically excluded, right? And so you had policies that were not specifically excluding cyber. And so what you saw was folks had a cyber event, they made a claim on a general liability policy because it didn't say that it specifically excluded cyber. And in many cases, like the insurance companies hadn't really expected those types of losses, and they hadn't been, essentially charging premium for it. They hadn't been charging for those types of risks. So now you've seen, new policies are specifically excluding or specifically not. And for the most part, what you see are the general liability policies don't have cyber coverage. And so what you see are these standalone policies. And that doesn't mean that they're more expensive. Cyber is can be pretty reasonably priced for almost everybody, but you really do want a standalone policy, partly because it has the appropriate limits, but it also just has a lot more clarity about around things being covered, right? When we do see a rider, it's like a 2-page or even 1-page literal piece of text. That's so different than a full policy, which has, can be 20, 70, 100 pages long, and just gives you really, really good clarity around what's covered. And honestly, the coverage is quite broad, but it's not fun having the lack of clarity, because then you end up having to potentially litigate with an insurance company, trying to figure out whether you have coverage. Errors and omissions, as a side, is another product that those who do technical work should have errors and omissions coverage. So you as a managed service provider should have both a cyber policy and what's known as a tech E&O, or errors and omissions. But unless you do technical things, you wouldn't need an errors and omissions policy. Like if you were a doctor's office, right? Like you're not building software, you're not doing technical things, right? But if you do those technical things, you actually ideally would want your cyber liability policy and your tech E&O policy paired together, and often you do see them as a single document, and ideally they're from the same carrier, right? Because what happens in a cyber event, if you're a tech company, usually somewhere in the process of an event happening, someone made a mistake. A vulnerability wasn't patched, blah blah blah. What you don't want is the two different carriers sort of pointing fingers at each other and saying, "Oh, well, that's actually an error and omissions issue, so it should hit a policy." Whereas the errors and omissions guy go, "No, that's a cyber event. It's a malicious actor doing stuff, so this should be under the cyber policy." If they're both with the same carrier, they can have that fight, inside the house, and worry about who's going to get credit for the loss or who's going to get dinged for the loss, but it's going to get paid regardless, right? If it's between carriers, there is that situation where now you've got to play, they're pointing fingers at each other, and there could be a gap in coverage.
So when you really
a lot there, sorry, God, I won't take as long for all of these slides. Right?
But no, we got to get a good foundation about where we're starting at, and that's the good part of it, because there are we got folks on from every type of industry on here. So it's good to lay out. Some industries doesn't require the same thing as others, and that's important to know. So let's take and move on to, what exactly does the cybersecurity policy cover? Because as we said, it's moved from, and actually a lot of this has changed a lot just here in the last 6 months. About how policies are going to cover things.
And maybe just to take one step back, I'll give you a little background on me and on us. So all we do is cyber insurance, right? And tech E&O coverage, right? Those are the two that we get. What's so different about the cyber insurance ecosystem versus other types of insurance? If you buy an auto policy or you buy, a business owner's policy, those insuring documents have been so standardized across the industry, like literally the carrier name at the top may be different, but all the insuring documents in many cases are exactly the same, right? They're essentially standard forms from that the insurance industry has come up with. Cyber is not that way yet. You have different coverage, different literal like insuring documents, different coverages from almost every carrier. And so one of the things that we think is really important is to make sure that you're working with a specialist who really understands this space, right? We offer 40 different plus carriers. That means there's 40 different potential insuring documents. The coverages are different. How even the terms get defined differently from different carriers. And so if you don't have someone who really knows the space and does it every day, I think often you can miss things and miss some of the subtlety that's here, right? And so it's a bit like, working with a doctor, right? And most of the clients that we work with have they have an insurance person who does the rest of their insurance purchasing. But usually cyber is not the place where they really shine, right? So we often compare it to like a family doctor. Your generalist insurer, great, like your family doctor, if you got sort of normal stuff going on. But if you need to get a triple bypass heart surgery, your family doctor is not the one who's going to do that, right? He's going to refer you to a specialist, right? And that's what we see on the insurance side, right? Like you want to. Cyber right now is the equivalent of a triple bypass, right?
Well, it's kind of like what we're seeing from our customers is, we're getting where one customer will come with their underwriter, ask them certain level of questions, which are kind of general. But then I get another customer, the underwriter's coming in and asking questions I've never seen anybody ask before.
Yep.
So ones are going, okay, show me all the records of PII in their environment, exactly where it lays and what security framework it applies to. And another one, they don't even bother asking that question. So it's not, you're going to run into all these different ones depending on who you talk to, but that also creates that other hole when you talk about what your coverage is, right? Because one might not know those questions and they cover you. They say, okay, here's your policy, but they don't really give you exactly the coverage you need based on your business. Yeah. And I'm starting to see that a lot.
Yeah. And I mean, like reading these insuring documents is not just the questionnaires, but the documents themselves is really, it's a little bit like if you've ever tried to read, when Congress or any state house puts out a law, it's sort of like you are often seeing, additions and changes to it. And it's, you read the main document and then there'll be attachments where it will say like, actually replace this, this paragraph in this section of the document. So it's not even, you can't even read the whole thing, in order and it makes sense. You literally have to kind of like piece this together. So it's a real challenge. And we've seen people struggle with that, even other insurance folks. So that's one of the things that we try and do is really be encyclopedic on the space and also explain things to our clients and to folks in sort of plain English as much as possible. We slipped into it.
Yeah. So with that, sorry. So you look at this, the three things we put on this slide is obviously the most obvious and really concerning things you want covered. But are there some other things that you might recommend you want to make sure you want to look for from a coverage standpoint outside of these three?
Yeah. So, let's just run through these real quick because, we've been talking a lot with this slide up in the air, but, data breaches, that's sort of the classic things, you lose PII, you lose credit card numbers, Social Security, blah, 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 right? That can be problematic. And there's actually some fines and penalties, particularly, obviously in the healthcare space. But you're seeing more stuff happening right now. The FTC just put the safeguards rule in place this year, and people actually have to comply with it. Even non-classic financial institutions, right? There's some issues with losing records. But that's the thing that people sort of think most about when they think cyber coverage. The other two actually, so business interruption. I was actually surprised that when I got into the space that cyber coverage would do that. But if your business is essentially down due to a ransomware attack or even, what's amazing, even like system failure, right? So you have two different standards for what causes an incident. It could be, system, there could be a cyber event, like essentially a criminal attacking, but the coverage also extends if, for example, a cloud provider was down for days or weeks, there was an issue unrelated to a cyber attack, the proverbial, roof collapsed with snow and took out a server farm, right? That would potentially be covered under some policies for business interruption, right? So the business would be covered for essentially their lost profits and unavoidable expenses like rent or employee costs during that period that their business was interrupted. Similarly, cyber extortion, that's a ransomware event. That's the fancy term for getting ransomed, and literally a cyber policy will cover paying the ransom. The one that you don't have here is cyber crime. That's related to the actual theft of either of money or marketable securities, right? Okay. So you see that as well. Usually you see cybercrime sublimited, right? So almost all of these on the good policies, you'll see full limits, right? Like if you buy $1 million, you have $1 million worth of coverage. Cyber crime, so the theft of money is usually sublimited, typically at 250,000 or sometimes 500,000, depends on the coverage that you have. So,
well, there's a good question. There's a good question there that kind of goes into some of that. They were asking, is the cyber insurance companies offering discounts or premiums if they can show that they have immutable copies of their data somewhere?
Yeah, we are starting to see that where you're seeing more movement in prices and more differences in prices based on the posture, right? For the biggest thing is that most carriers are binary in terms of their requirements, right? So they either will offer coverage or not offer coverage to an organization, and they usually do it by like industry and revenue size, right? So if you're a financial institution that has more than $20 million worth of revenue, for example, they have a set number of criteria that you're going to need to meet. And so if you don't meet those criteria, that, one of the carriers will not offer coverage to that organization. And so one of the things that we help our clients in working with folks like AvTek to help clients understand long before they get to the moment of needing to purchase a policy, how is their current cyber posture and their technology going to be perceived by various underwriters, and are they putting themselves in the best position to get the most options and the lowest prices, right? And they're obviously related. The more options that you open up, it's a more competitive pricing because you got more people potentially offering.
Right. So we come into, I'm sorry. So at this, and there's a question here that kind of leads into getting the cybersecurity insurance. The question is there, what's the best way of going about, standalone policies and their limits and coverages versus just the general policies that offer these riders? So what I tell people is that's one of the things where we help you with going in and we'll do an audit of what you're looking at and what's being proposed and coming in and explain the differences about what's happening. Because if you don't really know, then it's hard to navigate that. But
so I think when you look overall at the space, 12, well, it's probably more like 18 to 24 months now. I wouldn't say a year ago. You really saw kind of a big shift in kind of in 2020, because that was a pretty big 2020 and into 2021, big shift in a lot of ransomware activity. So what happened prior to that period, we used to joke, you could pretty much get cyber insurance, with a check and some stuff written on the back of a napkin, right? Like it was pretty easy. And then with all that ransomware activity, underwriting really started to tighten. The requirements were more significant to get coverage, and pricing went up as well. So now, some things like multi-factor authentication across all email and remote access is almost required by everybody. Good backup required by almost everybody. EDR you're seeing is a requirement for most. At least as you get EDR is kind of that bubble, but
so
yeah.
Are we going to see where the riders will go away because of the state because they need the insurance company, what they're looking at, they're even certain situations now, they're not even going to cover no more, like nation state, because they consider that like a war scenario. So is the riders, since they're so limited and really don't give you a good coverage, do you see that going away?
I mean, I think they're still going to be around because in many cases they're pretty good business for some of the insurance carriers, right? Like they're really low limits, and if they're getting some premium for it, they kind of like look like a deal for clients because they're like, oh gosh, I'm only paying another $200 a year, right? But you really, again, I really don't like them because I think the worst thing is when a client thinks that they have coverage and then they go, the airplane's going down, they reach for the parachute and they realize it's more like a handkerchief, right? That's just a terrible place to be. And again, the coverage, it depends on the size of the organization and the industry, but the size of the organization from a revenue perspective is the biggest driver. Right. And a standalone policy, I mean, gosh, if you're a little organization, we sell, plenty of policies at in the $1,000 zip code, right? Around $1,000, sub $2,000. Now, if you're bigger, those numbers start to grow. But gosh, it's really almost no one balks at the total cost. They're like, wow, I can't believe that I can get that much coverage for this, right? It's still a really good deal.
Okay, so when coming in here, and a lot of stuff here, you're talking about the insurance more difficult to obtain, and that really kind of where I was leading into where Lords of London come into play and said, okay, we're not providing coverage for anything like a nation state attack or anything like that because we're going to consider that war. So obviously because there was a lot of nation state attacks, there's been a lot of payout associated with those. So now you're seeing what's going to be covered changing consistently. So how do we stay up there? What's the best way to look for that and understand, even from your own policy today, what we've been having our customers do is get a review. What is it covering? What's it allowed? And is that place are they still honoring that today?
Yeah. So, I mean, there's a lot of discussion around the war exclusion, and essentially what Lloyd's did was clarify through language what would be considered sort of under that war exclusion. So for some background, every insurance product, whether you own a business owner's policy or, a car policy, they all have this war exclusion, right? And the reason that they have it is that imagine if you were, I used to use World War II as the example and what, the destruction that you were seeing. But now, I mean, just think of like what it looks like in Ukraine right now, where whole cities are getting, just destroyed. An insurance company can't, like the way the math works is they collect money from premium. They make essentially a pile of reserves, and then out of those reserves, they pay losses based on the likelihood of certain things happening, right? And so, like think of it for fire, right? Like holes, it's somewhat random which houses might have a fire, right? But you think in a war scenario, the entire blocks are burning, right? And so that reserves would have to be so large, right? That what they say is you can't have limited reserves for essentially unlimited losses. And that's what war looks like. So the challenge with cyber, and so cyber has actually always had this war exclusion in there, right? The challenge is that these nation state type attacks, it's unclear whether it's really war, right? Like it's it's Iran, it's Russia, it's North Korea, it's China, right? Attacking, those are the ones that particularly attack U.S. companies. How do they? Is it really war? I mean, and you think of because again, we've not declared war. It's sort of this
Right.
this damage that those organizations are doing. So what Lloyd's did was essentially clarified what was and was not considered under that war-like exclusion. And what they said is that nation state activity is going to be no longer covered under those policies, right? Now, we've not seen that holistically across the entire insurance ecosystem. We still see some of the non-Lloyd's carriers, and there's a lot of them will cover those nation state type attacks. You may see, and there's actually talk of the federal government maybe coming in and creating a program to handle these types of losses. They actually did something quite similar called the TRIA program to cover terrorist type losses after 9/11, where essentially the federal government created a pool of reserves and is the backstop, right? For, should we have another 9/11 type event, and losses related to terrorism is actually covered. So I think you may see some changes here, but again, just because when I'm buying auto insurance or house insurance, right, there's a chance that, that we could, that we could be in a war scenario and my house would burn down. But that doesn't mean, I don't want insurance for the other stuff, right? And 99% of the things that we see from cyber losses are not related to nation state. So again, important to focus on it, but I think it's one of those things that very, very clearly does not mean that the majority of losses that we're seeing every day from these insurance carrier portfolios is not going to get covered. And as a business, it's not a perfect solution, but it's a pretty damn good one, right?
Okay. So now when you look at it and you look at the cybersecurity more difficult to attain, the demand for cybersecurity obviously is on the rise. And the thing is it's what we see is customers. There are those that look at it, and there's those that are not really staying up to date with it because they're focused on their business, stuff like this. But one of the biggest things when you sit there, it's becoming where this is not a nice to have, it's becoming law.
Yep.
And law saying you must have these things in place.
Yep.
To do these things. And I think that's one of the things that's being lost out there is because the way riders was used and it'd be nice to have and do these things, they're missing the boat on this. And there's actually folks that, because depending on if they're critical infrastructure, if they don't have it in there, they actually face heavy fines from the actual federal government.
Yeah.
Because it's a stated law, you must have cybersecurity insurance and have a compliance plan to meet it.
Yeah. And what's interesting is actually an insurance, where it's legally permissible, and that's not every state, but it is in most states, an insurance policy will actually cover the fines that you could face from a regulator or from an organization. So for example, PCI, the payment card industry, is levies some of the largest fines, right? And they actually always enforce, Visa and MasterCard always want their pound of flesh. So they make people pay them, right? There's some big fines for HIPAA as well. What I've heard is that's typically not as enforced as much. It's usually used more as a threat to make sure that you go into like a corrective action plan. But yeah, I think particularly with this FTC safeguard rule that's coming on. I mean, I had just heard about it in the last couple of months, and from what I've heard, it's actually been around for about 20 years, but then early in January got mandated that people comply with it by December.
And I think that's what causes part of this sense of, well, it's nice to have, is because HIPAA's been around for so long and not really enforced. And like the FTC, it's been there, but not enforced. And that's what's happening, creates that false sense of what I need to go off and do. And the thing is what's important, because I know some of the folks that are on here, you know, it doesn't matter if you're a managed service provider like myself, or you're a bank, or you're an insurance company or a CPA firm.
Yeah.
All of our clients are now coming back to us and saying, do you have this in place? And if you don't, well, they don't want to do business with you because they can't take on the liability. Just
Yeah.
like ourselves, you know?
Yeah.
So,
And I think what, the background of what's happening is, I think the folks, particularly in the defense and intelligence community, realize how potentially vulnerable the U.S. Is, and particularly so many of the small businesses and medium-sized businesses. I think the Colonial Pipeline event that happened 2 years ago really got people noticing, and particularly, from the politicians in particular, they remember the gas lines of the 70s, right? And how detrimental that was to, some of that sort of ended the Carter administration. One of the reasons, really, really frustrated a lot of people. And so the federal government has been looking and at ways to use their regulatory powers to get institutions and organizations to start doing the right thing. That we kind of know what those things are. I mean, this is not new stuff in terms of putting together a good cybersecurity program. We've had a lot of these standards for 10 plus years in many cases, but they're just not seeing the movement. So they're using where they have it, regulatory pressure to make people start doing stuff. And you're seeing that with CMMC and anything that touches the defense industry. You're seeing it with the FTC safeguard rules. Anybody who's touching, banking information, you're seeing it in the banking industry, and I think you'll see it elsewhere. I think you're going to see a lot of state organizations probably start aligning to these as well and putting requirements in here. I was looking
like the SHIELD Act in New York and other stuff like that. Right.
Yeah. Another presentation, I think there's something like 36 different states that have some sort of regulation around privacy. And I think you're going to start seeing people just more attorney generals start to enforce that. And to be quite honest, they're going to make an example of some organizations, that put the proverbial head on a pike to sort of scare the rest of the community. And so
that's where the whistleblower piece comes into play, because the bad part is whistleblowers that they actually get a percentage of the fines that are levied.
Yeah.
So
and then you've got
there, and that creates more of the problem than anything else.
Yeah. You've got, again, I was talking with a lawyer a little while ago. There's what's known as private right of action, right? And there's sort of a decision when they come up with every law. Do they essentially say, hey, we as the governing entity, will we enforce this, or will we essentially include what's known as the private right of action, which basically means that attorneys and individuals, and particularly class action lawsuits, can go after organizations that are not complying with this regulation. And it's sort of Wild West, we're going to let the bounty hunters go after these folks, right? And so you've seen that the California Consumer Privacy Act, CCPA, had that private right of action. There's actually some really some of the stuff for the text message and robocalling. Again, there was private right of action. There's some at both the federal level, and then you see some at the state level as well. So, whether you like them or not, there's a lot of enterprising attorneys who, if you're not doing the right things, are going to come after you, right?
Yeah. And based on this, the other thing we can talk about now, it's law and things coming in the air, different underwriters not doing certain coverage and all this. We're seeing where it's slowing down how fast to get insurance, because we're getting underwriters coming in. they send us a little question, you say no to any one of those questions, then they said,
Yeah.
we're not underwriting you. Real
Yeah.
quick. And
Yes.
plus, because of that, they're getting a backup, a logjam of being able to process these, because now of all the things that they're asking now and the time it takes for these clients to provide this information. They got to stop doing their job, go gather all this data to be able to provide back to them.
Yeah, and I think so. Like I mentioned, 2020 was a particular year that you saw a lot of carriers pull back, and the risk committees at these different insurance carriers. You saw a big spike in losses in 2020, right? And so, many insurance carriers basically like cut their amount of risk that they would take from cyber, or flatlined it, right? They didn't want it to grow at all, right? They actually basically, and you pretty rarely see this in other lines of insurance, they basically non-renewed their entire books. They basically said, everyone who's a customer, we're actually going to automatically not renew you. And then if you want to try and get coverage, you're going to have to reapply, right? That's how serious they thought it was. And so you see, and the underwriters, it's sort of it's a seller's market for these underwriters. And in many cases, they have tens of thousands of applications. I was talking to a major insurer. They had the capacity, they just couldn't even get through the applications, right? So as they're getting longer, they're getting harder to process as well. So really, if you're at an organization, you really want to make sure that you have a pristine application, right? And that's what we're often working with clients and with folks like AvTek to help make sure we know what they're looking for. We know how these applications, what a good application looks like and what one doesn't. We don't ever, again, dumbest thing you can ever do is lie on an insurance application, right? One, it's insurance fraud, and I don't look good in orange, and I don't know many other people who do. But also, if you lie on an insurance application and then you'd go try and you have an incident and you have a claim, they're gonna do their forensics and figure out that you were telling the truth, and that's a pretty easy just claim decision from the claim adjuster. Sorry, denied, right?
Yeah.
So
with that question, there's a good question here I want to get to, because it kind of lays into what you just talked about, and we was talking about earlier about the riders versus the full policy. And the question is, if a company's living on a rider policy already, do they have to wait until the next renewal period? Or can they shift and put an independent policy in, or will they overlap?
Yeah, you can put another policy in. You can put another policy in. You actually, if you're between, if you're let's say you're 6 months into a policy, right? You can actually request a return of premium, so you would get the other 6 months back. Most policies, some policies have like a minimum earned period, so you may have to pay for like the first. If you literally put it in place like a month ago, you may not be able to get. You may have to pay for the first month or two, but almost always you can put something else in place, right, and get a return of premium. So, good question.
And on any of these questions, if with the answer we give, there's follow on, just keep bringing them on, and we'll address them as we're going along.
Yeah, cool.
So, okay. So with the current status of insurance market, we're looking at this. Certain carriers have better policies, but while having more requirements and other things of this nature. From your perspective, because you deal, I forget how many carriers you deal with.
40 plus.
40 plus, right? And I know we've worked on some deals, and we looked at this, and one carrier went and stuff. If you didn't do these certain questions in a certain time, then they just said, "Oh, we're not dealing with you," and you work with somebody else.
Yeah.
So when you're
there's a lot of subtlety. I mean, so and you want to think about like the sticker price is not always the biggest thing that you want to look for, right? So we have like there's one carrier that we that we often get a lot of quotes for. It's often what looks to be the least expensive, but when you actually look at the amount of coverage for the risk, right, for the price, right? So you kind of look at like, what am I actually, you shouldn't just look at the price, but say, okay, how much per $1 million worth of coverage am I getting here, right? The unit, that's what you really want to think about. So it's, when you're looking at a value, different policies look very, very different. The other thing is, what's the deductible, or in commercial, it's typically called retention. What are the deductibles on different pieces, right? Not just, and even there's a top number, right? That's the limit, but then there's sub limits for different types of losses. So sometimes you'll see, different policies have big sub limits. We talked about, there's usually a sub limit on cyber crime, but if you're not in a great policy, they may also have significantly sub-limited business interruption or ransomware or those others. Then there's this term pay on behalf, or reimburse, right? So there's two options. One, you would be in a case where you essentially pay on behalf means like, once you meet your deductible, the insurance company is going to be paying for stuff.
Just like your health insurance, just like your health insurance works, right?
Exactly. Whereas reimburse could be, you need to come up with the funds initially, pay for the response, and imagine you've got to pay a couple $100,000 or even a couple $1 million ransom. Coming up with that cash fast is hard for an organization, right? So, we prefer to find pay on behalf policies. They're not always available, but at least you want to understand what's going on.
So coming from that, if you're looking at it, out of the 40 carriers plus that you're doing, have you ranked them based on what they do, because really what we're talking about is value for return, right? Based on requirements, everything. They're ranking, and is there a way to determine?
Yeah, so
we're trying to go do.
I mean, we absolutely do that, but you have to do it for each individual organization, because so typically when someone works with us, we give them usually their top 3 options, right? And some differences between them, because again, that you may have there's nuances, right? Like an organization may say, hey, I actually want a slightly higher retention or deductible, right? Because I have the funds to do that, and that's going to lower my premium, right? Or, this coverage is not as important to me. So we typically give the top 3 options, but then also show, oh gosh, we looked at, potentially dozens more as well. And that's why, and here's why they didn't maybe make the top 3. But you can't, it's not, the number 1 or even the top 3 choice is not the same company to company, because what they're offering, some are better for this industry. They really like law firms, and they have great coverage for law firms, but they don't literally want, maybe they don't want some industries. And you often, insurance carriers, they like to offer terms to a lot, right? So sometimes what they'll do is they'll offer a price that is really not competitive, basically, so they can say, hey, I didn't deny it. I just, I did offer terms, but they know they don't really want it picked up, right? Or gosh, if you're willing to pay 3 times what it should cost, they'll take it, right?
Okay. All right. So let's look, a good cyber policy. And this is kind of what we've already been talking through. And I didn't switch the slide because we're going to keep going through. But even when you come in, we was already talking about, just because it's a cheap policy doesn't necessarily it's a bad policy. It's always evaluate what is being provided for that value. And a cheap policy looks cheap, but it may be more expensive because for what it's providing, the cost for that providing is higher than what the more expensive policy is giving you, because they're giving you more value for that. So that's basically what we're saying, right?
Yeah, and I would say that these numbers are right for organizations that are probably sub 10 million or sub 5 million in revenue, right? So that price per million of again a couple $1,000s. Now, if you're a $10 million, $20 million, $30 million organization, you're going to pay more per million, because again, like we talked about, business interruption is a big portion. Is when claims are big, the biggest share of the cost is related to the business interruption losses, right? So if you're a $30 million organization, right, or we'll say 36 million to make the math easy, right? That means you clip $3 million of revenue a month, right? 36 divided by 12, right? I think my math's right there.
Yeah, on average, yep.
I'm a history major, so math's not my strong suit, right? I got my data scientist in the room. He's nodding too, so I think I did all right. So anyways, if you're down for a month, you could be out, $3 million, right? So that policy, you're gonna quickly, use that whole $1 million of losses, right? You compare that to an organization that has $3.6 million of revenue a full month, which is how long often a ransomware case will take to resolve itself and get the business back up and running. It would be $300,000, right? So that's where the insurance company is doing the calculation of how likely is this event going to happen to you, an organization like you, and how severe, how big are the losses when they do that. So that's why you see those big changes in price when you get to bigger organizations.
Well, this kind of leads into looking at Lee's question. He's in a ransomware situation. Should the ransom choose to be paid? Is that handled via the insurer, or do they provide the funds to be covered entity to then pay the attacker? So this goes back to pay on behalf, and those I think there's a little bit more that goes into that situation about when you start talking about paying it because of what you do from the incident response plan.
Yeah, I mean, so one of the things, and gosh, we talk about it all the time on these, is, if you're dealing with a significant incident, like this is not something that you should be doing on your own, right? You want to be bringing in expert incident responders, forensics folks, a breach coach law firm, right? To handle all these pieces, right? And a ransomware negotiator. Those are, you definitely want them to bring in. You definitely want those folks doing stuff. This is not a place where it's a DIY type situation, but yes, a pay on behalf policy is going to be to have those. They will pay the ransom on your behalf using
your insurer is going to pay, right?
Yes, exactly. And they're going to use a specialist firm that just does handles ransomware payments. They have Bitcoin wallets. They know how to handle these funds. Do it you got to check before you pay a ransom that the organization's not on the terrorist list, the OFAC terrorist list. So because some are, for the most part, the ransomware gangs, once they get on those lists, they sort of dissolve and rebrand themselves. So, most aren't on those lists, but you do have to check. Right?
Well, what we tell clients, and is coming into this, is when you get into this scenario, is first call should be to your lawyer, not the insurance company, because when you call the insurance company, you're dealing with a breach coach. The breach coach is actually the insurer's legal counsel. So you want to call yours to where you're having legal to legal talking, so you don't accidentally say something that might cause a problem there, right? And you got that guidance. Well, but also when you talk to those, they're going to look at the policy about how that payout's done.
So, the breach coach is actually not. I mean, they are paid by the insurance carrier, but they are your lawyer. They are not the insurance carrier's lawyer, right? So you actually, when you call a breach coach, you actually sign an engagement letter with that breach coach law firm. And one of the reasons you want to engage them relatively early is then the work that gets done by the incident responders, the ransomware folks, all of them, they actually get paid by the law firm, your breach coach law firm, right? And that breach coach, and that means that that work has the potential to be shielded under attorney-client privilege, right? Okay. Not always, but not all of it, but you at least have that potential defense, which can be really important both in regulatory, the regulatory actions that you may face, as well as class action, right? The legal risk here is significant. So, I would encourage organizations to also bring potentially their attorney, but
Right.
I think there are some specialist firms. We know many of them actually, our hotline is answered by a law firm. They, the one that answers ours is Mullen and Coughlin. They do, 3,000 plus cases a year. So and they've been doing that level of work for close to 10 years. So you just imagine the amount of cases that they worked on. This is not a place, again, where you want a lawyer who's not done this to be really quarterbacking the whole situation, right? But I would encourage, happy to bring your own attorney and loop them in. But unless your attorney is strangely an expert here, I would want to make sure that you get with one of these good breach coach law firms.
Oh, absolutely. The guidance I was given, and I've used that, is it goes back to the attorney-client privilege, is when you're calling, if you've called your lawyer, you can have them on there. Anything that you say then becomes attorney-client privilege, and when you're having that, so those things that might fall outside of the breach coach privilege, it was part of the reasoning they gave it to us from that standpoint. And I've run that by for the retired some of the FBI agents we've talked to, and they said, "Yep, that's a great practice to use." Doesn't mean you don't need that specialist, because you have to engage the breach coach, but that also gives you that little extra layer of protection.
Yeah, it's a good idea. Cool. All right.
Oh wow. Yeah, I mean the hour's going by fast, extremely fast. So what I want to do is I'm going to come back around. Our next webinar, we're actually going to have Mr. Joe on, and he's going to be with it. And we're actually going to take what we've been talking about here and get into what are the requirements. How do you know what requirements you need for cybersecurity insurance, and what you're going to need to look for, and how you determine that stuff. So that's what's going on following here. If you didn't see the whole presentation today, you can still go back. It'll be recorded. But what I want to do now is get to where we actually get into some of our questions. And so far, Lee and Brandon and others that's been asking questions, have we answered the questions you have? If not, hey, it's question and answers time. We still got about 8 minutes here. And I want to see if there's any other questions we can address for you, whether it be for Andy or whatever it may be. And Andy, where are you traveling to next?
So I'm in New York today, actually, and then I'm heading back. I live in California, so I'm heading back home late tonight. And then, but I bounce around the country, not quite as much as as Larry, who goes to a lot of conferences for us. But I think he was inspired by that movie Up in the Air. Trying to get as many points as he can.
Larry was going to actually after the requirements one, the following one will be me and Larry actually talking about how we combine actually help our clients, address what their policy requirements are, how they're doing that, what they've actually signed up for, because there's requirements. What we find a lot of our clients are doing when they sign the policy, they go off and sign it, go. But they don't really know what they signed up for, the actual true requirements, that if you're not having those things in place, then it could be where they don't pay out. Yeah. So we really want to take this education all the way through and make sure we cover that. But hopefully it's a good start for everybody. Yeah.
And I mean, I think, it's been fun to have everybody here. And I know it can sound complicated, right? And we're going to kind of poking around the edges and the nuance, right? But, for most of our clients, we've tried to make it really simple, right? How do you just put the basics in place from a compliance perspective, from a tools and technology perspective, and from an insurance perspective. And I think one of the things, why we have partnerships with folks like you, Wayne, and other managed service providers around the country is, you can kind of, as a business owner, what you want to create is sort of an all-star team of experts who are handling this issue for you, right? And we are working together to kind of on your behalf, right? Just the way, if you see a really good team of doctors are working together, you've got, the heart specialist and the lung specialist working together, if when you've got some serious things happen at the hospital, and you don't have to necessarily understand everything that they're talking about, but that they're both really good, and that they're working, as long as they're working together well. And unfortunately, what we've seen, and the reason that we started this business, honestly, was we weren't seeing that level of communication happening between the technical side of the world and the insurance side. And when you have folks working in sort of silos and not communicating, and often not speaking the same language, and gosh, both insurance and cybersecurity have their own sort of alphabet soup of acronyms and specialized terms. And you just got to get a team that really can communicate and get on the same page. And then you, as a business owner, can really kind of check this off your list on a daily basis. You got to revisit it, annually, make sure you got the right things in place, and obviously keeping your cybersecurity up to going is an everyday job, but getting the big step is getting the right people in place and making sure that you have people working on your behalf. Right?
Absolutely. That's the important thing. That's one of the things we're finding, to a point you're just making there, is because the way it's changing, and now it's a requirement of business. Every time you're making a new relationship, they're asking you, do you have these things in place? So that annual review is getting to where that's not sufficient enough. It may be for the policy that you're getting an underwriter, but you're having to review it now every time you're making a relationship for business. At least we're seeing that happen all the time. I get asked all the time, do you have this in place? Do you have your policies in place? Are you keeping those up to date? And because of that, we started and came out and look at doing its compliance as a service, because we found that to be a whole. People do it once a year, but they don't have it tied together. And then that creates, where we get into requirements on our next webinar, you'll see where those requirements are. And we're finding that, I didn't know I needed to do that.
Yeah. And I think that the smart organizations are kind of keeping things up to date, working with folks like you, so that they're ready, so that it's not, it's not a holdup when they're trying to do deals. I mean, and we've seen that everywhere from, the construction industry, where they've got requirements to have a certain amount of coverage and have certain things in place before they'll go onto a big job. To suppliers, to major organizations, gosh, I'm working on this deal. Even places like staffing organizations, right? They have a requirement here. It's just sort of slowly leaking through, every different industry in different ways.
So we got one more question. We got just enough time to handle it. Should there be at least annual meetings with DataStream, insurer, MSPs, legal representation all together versus separately? That's an interesting question. We try to, with the components, have at least once a year talk together. We're driving it to where maybe we even look, depending on what the business is, how often they're doing things. A lot of people talk individually. Insurers aren't typically going to meet with you, right? Like, that's really what a good broker is for. We are here to kind of help you understand and navigate the insurance industry. So I think, it's good for someone out of all three of those ecosystems, right? Us being the insurance folk, obviously the MSP, and then, the legal folks, if you're in a compliance heavy area, that's where the
thinking through, and it's not just compliance. We are seeing a lot more requirements around contracts, right? And is there specific language around contracts, particularly limiting liability of organizations and all of those things? I think on an annual basis, making sure that those things are all up to date. And I think you'll see changes. Obviously, the first time you do that, there's going to be a lot more work. The revisiting is going to be you know,
A lot easier.
A lot easier. Yeah.
Well, that actually wraps up our time. That was a fast hour, Andy.
I
And obviously,
mean, you know,
we just scraped across the top of it. You know what I mean?
yeah. I mean, I'm gonna send this recording to my wife just so she actually believes that people want to talk about insurance.
That sounds like my wife too when it comes down to it.
Yeah.
I
She
want to thank
certainly
everybody
doesn't.
that joined. If you know folks that might take benefit from listening to this, just have them go to the same link you went to. You'll be able to get in there and see the actual recordings. We'll have materials there, and hopefully you'll join with us next week, same time, same place, for determining how we figure out the requirements.
Cool.
So with that,
Appreciate
y'all
it.
have
Thanks,
a
Rick.
wonderful day. Andy, I'll see you soon. John, behave.
Yeah.
I'll do my best.
Yeah. And thanks to the whole
That was
audience.
awesome, guys.
Good questions.
All right, guys. We'll talk to you soon.
Thanks, Lee. Thanks,
Bye,
everybody.
everybody.
Bye.